Good morning, Wall Street winners. It is Friday, August the 15th. And as we head into the morning session in just about half an hour, I wanted to show you an article that came out on the Bloomberg, and it's from Goldman Sachs, recognizing the main drivers behind the current rally. The S&P 500 is entering Friday's session, this morning's sessions, having just registered its 18th record closing high of the year. And there, Goldman is starting to become a little wary, noting that compared with previous periods of low volatility, there's a less friendly asymmetry to the stock market. Now, that to me is a very ambiguous statement and doesn't mean a great deal. But if you dig into this a little bit, they're basically saying that they are more fearful right now of a pullback and believe that because of the all-time highs, which is something that I've been talking about for the last couple of weeks, that there's going to be a pullback. In the last few weeks, high and rising valuations again contributed to higher equity drawdown risk, but also worsening business cycle momentum due to weaker labor market data, which we've seen come out. That's why the individual who ran the Bureau of Labor and Statistics, BLS, was fired by Donald Trump and replaced. So, with all of this in mind, their team says their asset allocation remains tactically neutral. Again, ambiguous speak in the financial industry, meaning that they're cutting back on risk. And they're suggesting a few strategies, some put strategies, some of which I've talked about that they go into greater detail. You can click on what a put spread is here and go to, I think it's in Investopedia, and have a look at that where it explains it very well. I can do a video on that if you're like, but they say that there's likely more downside than upside risk as we move forward. And then you can see the risk on, risk off gauge here. This combined with something I talked about in an earlier video today, which is the fear and greed index with the index up in the greed section. We're not in extreme greed yet, which is good, but we have bounced back. If you look at the timeline from Liberation Day, where we dipped down into the low area here of very little greed and more fear up into the greed section. And this will walk you through how it kind of spaces that out and how it calculates fear versus greed on the index itself, and then where the S&P 500 is. So that's where we are today. Be risk averse. Good luck in your trades. And if you like the videos, please hit the like and subscribe button.